Between Global Opinion now, Jim Awad, Managing Director with Zephyr Management, joins us live from New York. Jim, morning. Thank you for joining us. We are there, Jim. Dow has closed above 13,000.
Right. So what you have, the positives are that the United States economy is doing better than expected on virtually every metric on a pretty consistent basis. You have tremendous amounts of cheap money in the United States and in Europe. In Europe, they seem for the moment to have created a firewall around Greece. You'll notice that Portuguese and Spanish and Italian bond yields are going down, and in emerging markets such as India, the policies are becoming a touch more stimulative. Those are all the positives. The negatives are that the market's up a lot. It's susceptible to a correction at any time. Secondly, we have this problem between Israel and Iran, which could erupt at any moment, which could affect both the price and availability of oil. And the third is that the confidence in Europe could erode at any moment. You still have the chance of an accident. So, as somebody was just saying, the trend is your friend, but you've got to be careful. The trend could dissipate. So I think the emphasis here should be staying in with quality, but not lowering the quality of your portfolio just in case one of the negative events happens.
Jim, hi, morning. Some experts do believe that markets may actually rally if LTRO2 is anywhere above 300 to 600 billion euros. Would you say the same?
Yes, I agree with that. To the extent that they can keep providing liquidity in Europe and give the sovereigns time to work out their problems, that's an absolute positive for the world economies and for the financial markets. But the key thing to look at, Greece, at some point, they're going to declare it in default one way or the other. And so the question becomes, look at the Portuguese, the Spanish, and Italian bond yields. As long as they do not go up in the face of that, then we're in the all clear. If for some reason those yields start to rise, it means the firewall will have been broken, and that could have a negative effect on world financial markets and economies. But as long as those yields stay low and the Europeans keep providing liquidity and the U.S. economy continues to improve, we should be fine.
Jim, ECB and Fed can control and monitor or pump liquidity, but it's ultimately commodities which decide growth. Crude is at $122 per barrel. Can markets afford to ignore that?
Yeah, well, I think the issue with crude is not necessarily monetary policy, not necessarily demand. It's the issue of a strategic confrontation between Israel and Iran. And what I would tell you is that if there is not a conflict by something like the July 4th holiday in the United States, there's likely not to be a conflict, and then oil and other commodities, but particularly oil, will respond to supply and demand, which will result in a lower price, which would be positive for the world economies.